Going on, everybody? It is Chris Brown, your real estate professional and marketing entrepreneur. So, welcome to another episode of State of the Real Estate Market with yours truly, where we not only talk about buying, selling, and investing in real estate, but we also talk about hot topics regarding entrepreneurship as well as building generational wealth. And speaking of building generational wealth, we had a great week with another organization I'm affiliated this past week. Was amazing and filled with different activities about building generational wealth. So a bunch of you guys that follow me on different social media platforms, I hope you guys got that information and got some value out of that. Lots of information that we shared. So as we do, this is the market update. So I really appreciate you guys tuning in, chiming in. Looks like we got people live on let's see, we got YouTube, we have some Zoom action as well. Looks like we have some other folks getting involved on Facebook. Where else? Where else? Where else? Twitch. I appreciate you guys, especially those Twitch people. I definitely appreciate you guys. It's been a journey, and always, if you for some reason are able to view it today, I'll post this information, a live replay, back out on social media for you guys as well. So keep that in mind. Looking forward to connecting with you guys and making things happen. But without further doubt, let's get into the market. There's been some interesting things going on. People are like, what in the world is going on? And it has truly been interesting. So we want to dive into this and make sure you guys get the latest and greatest, get some feedback, get some better understanding. That's what it's all about, getting better understanding of what's going on in the real estate market. This is April, the market update, the 18th, April 18th. It is already April, guys. So April 18th, we do this once a month. We do the market update once a month where I come out to you guys and make sure you guys get the latest and greatest, get some feedback. There's so much to talk about, but I try to focus on the major items that you guys have been sending me questions about. We're going to talk probably a whole lot about these stuff, that because it's really impacting what's going on. So guys, if you haven't already, be sure to like, subscribe, hit the notification button that's on there. Get all the goodies that I send out. I send out goodies on a daily basis. If you're on the YouTube, if you're on the LinkedIn, I usually try to put something out there, some piece of value out there every day so that you guys kind of stay tuned. And then we all kind of bring it all together once a month with all these different updates, giving you a little bit more detail. So be sure to like, subscribe. Makes me feel a little bit better that I'm adding value. That's what I like to do. Just add value. Just give me a like. I appreciate it. Like and a happy face. Appreciate that. So let's keep diving. So April, what are we dealing with in April? April, we are a few key takeaways. Big banks push for simpler mortgage rules. That is something that I'm starting to see a little bit more of, or things that are like that make it very affordable to get into a particular property. I'm starting to see a little bit more of that, and there's different tools that are being leveraged to help people reach that point. So we're going to be talking a bit more about that. So guys, be sure to tune in and stay linked in with us. So let's do this. Make sure we get this. So one of the big tools I want to talk to you guys about what's going on in the market. Big banks pushing for simpler mortgage rules as the housing market slows. So big banks are urging that Trump administration to simplify the regulations related to mortgage loan origination, servicing, and securitization in the hope that these reforms may lower cost and boost lending activity in struggling U.S. housing markets. So we all know right now we're all going through a situation with the housing market. Things are going on. Things are, are slow. People that want to buy homes but actually cannot get into the market for what they were looking for previously and then what they need. A lot of people that were looking for those starter homes, 4 bedrooms, 2 baths, for their family. Now they're looking at homes that are actually maybe a townhome, versus say a single family home where you have a yard, front yard, backyard. Now they're looking at townhomes. And ideally, if you have a bunch of kids, our townhomes, do you have the yard for the kids to play in? It's a great home, but is it actually it's a great house, but is it a home for you and your family? And that's what I mean by that. So there's a lot of talk around this. And in regards to the terms, one of the articles that I was doing some research on came from Yahoo Finance. So in terms of mortgages, reducing unnecessary regulations would decrease homeownership costs. And this is from JP Morgan Chase CEO Jamie Dimon, I believe that's how you pronounce it, Dimon, wrote in his annual shareholder letter. Now, with some information that came out. So people are trying to look at this process and seeing where's the bottleneck at? Where's the process bottlenecking? Where are people having issues? If we were to lax on certain terms, would that still secure a home loan but make it easier for people to qualify? So streamlining loan origination and service standards, reducing capital requirements, and simplifying simplifying rules would reduce the cost of mortgages without making them riskier. That's a thought. These simple reforms would lower the cost of mortgages by 70 to 80 basis points, which is significant. This push for reform comes as JP Morgan's mortgage volume fell to 11.2 billion in the first quarter ending on March 31st, down from 14.2 billion in the fourth quarter of 2024. So as you guys can see, the impact of what's going on, organization like JP Morgan's mortgage department, they're losing billions just from one quarter to the next. So that's interesting to see that, especially compared to the fourth quarter and then going into the first quarter. Typically and traditionally, the fourth quarter has always been one of the slower markets. So if in a slow market was at 14.2, and then you're going to 11.2, in a market that's supposed to be picking up the pace, that's not looking too good. So no bueno on that. Meanwhile, by home lending from the bank's retail channel fell to 9.4 billion to 12.1 billion, or from the 12.1 billion in the fourth quarter of 2024. So you guys are starting to see this. See, even the big boys are starting to feel this. And when the big boys start feeling this, and this is when changes occur. This is when you start seeing changes. Bank of America, BAC CEO Brian, I'll say M because I'm not going to try to pronounce his last name, Moynihan told investors during the company's first quarter earnings call this week that he is hopeful for changes in new policymakers that are taking office. So we'll see what the administration does. I mean, it is a challenge right now, as in what's going on. I don't really care who's in the office, but it's a challenge. We have when the big boys and big organizations are starting to feel the pinch, then things need to be done. What adjustments are going to be made? Obviously, keeping things secured. We don't want to do something that'll cause us to crash as an economy later on. So we have to keep a close eye on what's going on. It's critically important that we get this rebalance. This is coming from from Bank of America. Sometimes regulations get in the way of that, which is true. We see that. At Bank of America, home lending held steady at 254 billion in the first quarter, unchanged from the previous quarter. So obviously Bank of America is doing something and JP Morgan is doing something different as well. So with that being said, what are the big boys doing, and what is Bank of America doing? What are they doing to make things a little bit different? Wells Fargo, another big or financial organization out there. Charles Scharf echoed Deming's settlement, telling analysts last week that bank supports the administration's supports the current administration's push. Sheriff said that proposed changes would allow more loans, take more deposits, and provide more liquidity to the markets while preserving robust regulatory oversight. Wow. Okay. So that is interesting. So guys, a lot of times when we're going through this and I'm getting this information, I'm trying to bring you, you know, gems that are coming from different economists that I've followed over the years, and I read their reports, all the boring stuff. I try to give you guys the abbreviated version, just let you guys know what's going on. A lot of this stuff that's out there and that we're, you know, concerned about and that we are uncertain about. There's a lot of uncertainty of what's going on in the market right now. So always keeping that in mind as we are pushing forward with this process. So see what other goodies we got here for you. So another big piece that is out there and people are asking questions about, it's, you know, what is the local government? Because at the end of the day, a lot when we look at the national regulations as in what's going on and what's happening, we always have questions. But at the end of the day, you have to look at what's happening in your actual market. What is your actual market doing? So as we touch bases, like we said, the big banks are pushing for simpler mortgage rules. Cities taking more approaches towards affordable housing. I can say in the Tampa Bay area, there are challenges with affordable housing. Affordable housing right now, um, it's a fight. It's a fight, and then you want to know what are the local governments doing in order to do so, to match these or just to accommodate, see what's going on regarding um, these different changes that are coming and the changes that are occurring. So one of the things I definitely want to share with you guys, in the Tampa Bay area, there is a town or city called St. Petersburg. So St. Petersburg is definitely a town that is a lot of changes. Has been impacted by the storms. I've reported it before with you guys, where there's challenges regarding the baseball stadium. Baseball stadium is, it seems like the Rays at this time, and I think it may be official, but nothing's never until it's finally never. But it looks like they may not be returning to the Tampa Bay area, or they're not making the repairs to have the team perform in the St. Petersburg area. But with that also being said, there's a lot of development that's still occurring. It wasn't all dependent on what was going on with the Rays, the baseball team, but some of the other things that the city is doing is that they just recently put out a new RFP where St. Pete talks about where they're taking another shot at affordable housing. And this is like some property and land that they've had that's in the St. Petersburg area. And I kind of want to show you guys what it looks like. Let's get that on here for you. So excuse all the extra advertisements, but this is a site that is actually in St. Petersburg, where they're looking to do additional affordable housing. It's about 5.4 acres. It's in considered what they call North St. Petersburg, but pretty close, but an area where development can occur. With that development, it's about seeing what they're going to actually do in regards to affordable housing. This is one of the challenges that St. Pete faces. It's just the continuance of trying to find different opportunities to do this, and then just because you have a great idea, now you need to get the contractors. There's so much uncertainty if you're taking on a project right now. Construction costs, material costs, labor costs, tariffs. that's going on. What's going to impact the project? If you're getting started on a project, it's a lot of ins and outs, a lot of contingencies, especially in today's economy where it's a lot of uncertainty. But so a city like St. Petersburg is doing big things and trying um, to make housing a little bit more affordable, or just having more options in regards to it. So the article basically says, and this is an article from the Tampa Bay Business Journal, St. Petersburg is taking another shot at transforming a former college site into affordable housing with some key changes to its vision for the property. They have to make some adjustments. And that's one of like I said, I just showed you guys the site. And with that being said, a lot of things are going to be changed just because they had a particular vision of this particular affordable housing site. It doesn't necessarily mean that it's actually going to go through. Another article that I kind of keep in touch with is the Housing Wire. A lot of us are familiar with Redfin. Redfin's report states that housing market cools as economy tariffs weigh on buyers. So the impact of the tariffs, we've all heard about it. We've heard if it's going to be threats. We want to know if it's officially going to happen with a number of the different tariffs that are out there. Even if it is threats, right? It's impacting how people are thinking. It's also impacting on people's next moves if they're actually going to do something. So the median U.S. home sale price rose 2.5% year over year in March to 431,057, according to Redfin. And this is information coming from Redfin. That marks the slowest annual growth rate since September of 2023. And is a steep drop from the 5 to 6% increase when we saw, or when we were in the late 2024 to early 2025. So you guys saw that increase, as I mentioned earlier in the previous article, that at the end of the fourth quarter 2024, and how things are resulting as we're moving into 2025. So it's all starting to be it's starting to impact of what's going on. Things are slowing up. Is that a good thing? Bad thing? What does that mean? Is it going to be a continuance? This is why we come monthly, because with these big reports, if we start seeing the trend, these are the things that we need to have a heads up on. On a metro level, prices fell in 10 of the 50 most popular U.S. markets, largely in Texas and Florida. It's my market. The decline in price growth comes as the housing market contends with an increase in supply, which could be helpful. And that's basically because of the demand. Only 27% of homes sold for more than asking price in the month of March, the lowest share for the month since 2020. So only 27%. We used to hear about homes selling for more than asking price, especially during the pandemic. Everything is selling for more than asking price. Total active listings reached its highest level in 5 years last month. We are in the market, even with a number of my listings that I have. I'm speaking to my sellers, letting them know that, hey, we're actually in a position now where there's more properties that are coming onto the market. So what does that mean? That means that there's more competition. If there's more competition, ideally, then there's going to be more negotiating. What makes this property different than the other properties that are out there on the market? What features does this particular property have that's different from the other properties? Why are we priced at a certain amount? And that's why a lot of times when you're looking at properties now online, they're really highlighting the features that a property may have. Highlighting the features of a property is what's going to spark the interest of any true buyers that are looking for homes in today's market. So it's really highlighting the benefits. If you're being dull with the benefits and not showing the features of that home, especially early, people's attention span is short online. So I try to show the highlights towards the beginning, and then show them the basic stuff that they're already familiar with. Like if it's just a general picture of the bedroom, that's okay. Well, let's show, if it has a pool. Let's show if it has energy saving or an updated kitchen. Let's show if it has an updated bathroom. What technology does the home have? If it has a community, what does the community have to offer? Is it close to the highway? Is it close to the airports? Is it close to the beaches? Is it close to schools? These are features that should be highlighted in anybody's listing description, especially if you're trying to get a property sold in today's market. So a lot of buyers, especially first-time home buyers, are backing off because they're nervous about the potential recession. And this is actually coming from Redfin. This is a Redfin agent from LA. They made this statement. Some house hunters are hanging out on the sideline. Like I said, a lot of people have been on the fences about this because they're hopeful the mortgage rates will continue to come down. Well, we know what happens. I've already expressed it before. If mortgage rates are going to actually come down, that means you're going to have more people coming into the market. That means you're going to have not only more people coming to the market, that means there's more competition. So these are some of the things we have to be mindful of. A lot of people are saying, hey, I'll just wait till the rates drop. Well, if you're waiting for the rates to drop significantly, at that point, people are already going to be in the market. You're going to have more competition, people trying to get to the homes. If you get a home now, if you're in a position to purchase a home, you can also refinance that home later on. So also keep that in mind. If that is the big thing that you're waiting on, you can always refinance later on. So always keep that in mind. So this is another article. I definitely wanted to share this one with you. So Zillow made a comment in reference to, let's get this here. So Zillow has recently made a comment in reference to their expectations of the market. They're stating that they're actually making a shift as in what they previously said about the market. So at least they're telling it out to the public and not holding it to themselves. So by having and taking the opportunity to view and change their perspective of the market, that means something is really impacting their opinion. And like I said, the big talk right now is the tariffs that we have that a lot of people are talking about. Are they truly threats? Are these things that are actually going to truly happen? But I want to share this article with you guys. So take a look in here. So Zillow turns housing bear, and that's what they're saying about the 2025 forecast. Now remember, if you guys have been following me, I gave you guys insight on what they thought the market was going to be previously. So let's take a look at this. So Zillow projects that the U.S. home prices will fall 1.7% between March of 2025 and March of 2026. So this is the projection that they are saying moving forward, that we should expect a decrease of 1.7%. Now, last month, Zillow economists still thought the U.S. home prices would rise this year. So they were previously predicting that we would have a slight increase. Now, they weren't saying that we were going to have a huge increase, but they did say that we were going to have a slight increase. So now they're completely turning it around and saying that we're going to have a decrease. So what's happening that's out there that's really making the economists change their mind? The big news right now is tariffs. Are the tariffs really impacting their thought process? What is it that they see about the tariffs? Do they actually see them going through and actually happening? Not 100%. So, but basically they're saying, Zillow turns the market, they say it's going to go bearish. And they will also wanted to be clear on it. Zillow economists still aren't calling for a national home price crash. Okay. But they did just turn the market to bearish. So like I said, and this is what they're saying for 2025. They're not saying that it's going to crash. So keep that in mind, guys. They're not saying that it's going to crash, but they are saying that basically that there's going to be adjustment, and it's going to be adjustment towards the negative side of things. And this was on Thursday. Zillow economists published their updated forecast model projecting U.S. home prices as measured by Zillow Home Value Index will fall 1.7% between March of 2025 and moving forward with March of 2026. So back in March, Zillow downgraded its 12-month outlook for the U.S. home prices. And these adjustments are going to still continue to be reviewed and seeing what's going to happen in the upcoming months. So guys, as we go through this, there's always going to be change. When you have this back and forth, this is why people, sellers and buyers, they're uncertain. At the end of the day, I always tell you, if you're in a position where you need to purchase a home, like if you're moving to a new town, go ahead and purchase. That puts you in a position to purchase. If you are, and that also puts you in a position to sell. If you're moving elsewhere, your job is moving, you may need to sell. And it also depends on what your current situation is. I've had people say, hey, I need to move. I'm going to go ahead and keep my current home and rent in the new city. So, and just rent my current home out. Possibly is an option. So it's really just educating yourselves on what's going on. The market is uncertain right now, but you're going to really have to educate yourself on seeing how it's going to impact you personally as an individual or as your family when you're moving forward and you're trying to make a decision if you want to sell or not. So another article, I'm always sharing these articles with you guys. You know, the recession won't make mortgage rates. There's an article that says that they feel that even if a possible recession were to occur, it's not going to impact the mortgage rates or home prices, meaning that the prices aren't going to be cheaper and it's not going to directly impact mortgage rates. So what's going to happen? It's a lot of uncertainty. I wish I could say something different, but the economic headlines are full of recession indicators from tariffs and the potential trade war regarding the stocks. We've definitely seen some changes and adjustments in the stocks lately. With mortgage rates all over the map, some home buyers are wondering if there might be a silver lining to the downturn. Especially by investors, we're always looking for opportunities. I'm always telling people, hey, if this market crash, you have a ton of people that are wanting this market to crash because they want to come in and buy up real estate. Now, keep in mind, there may be some competition, especially with a lot of the big boys that are out there, the hedge funds that are buying homes, but there's also opportunities for those who aren't hedge funds as well. So namely, lower mortgage rates and home prices, those are the things that possibly would happen, but why would they happen? That may be the reaction to helping improve the market. If we're starting to see a downturn and with lower mortgage rates, that may encourage people to jump back into the market and actually purchase. And then obviously home prices would be impacted as well. So keeping an eye on that. An individual that's actually worked in real estate for over 20 years, they've seen their share of the market flux from boom times to full blown crashes. I can attest to that. That's that 08, 09. I definitely was licking my wounds from that situation, but made my way out of it. When it comes to buying a home, the economy is just one factor to consider. Regardless of how messy the market is, there's always an opportunity for certain home buyers. If you're financially ready. See, that's what I was talking about, guys. Stay ready so you don't have to get ready. If you feel that you want to purchase a home, go ahead and start going through the process. If you need to clear up credit, go ahead and get it cleared up. If you need to be saving for a down payment, go ahead and do that. There's so many programs that are out there, especially down payment programs. And then especially even with new construction, you have new construction that are offering $20,000 to $30,000 towards down payment and upgrades, $30,000 in incentives just for you to purchase a home. So those are some of the things that may be a benefit to a lot of people if they're trying to move forward in today's market. Now, if you're selling your home, the expectations have to change. Expecting to sell your home at super high dollar, that may not be the case. It may be a situation where you need to be a little bit flexible and be maybe perhaps willing to ask for a certain price, but be also willing to pay towards lowering the interest rate, buying down interest rates. Also when you're doing that, that gives you flexibility. You may get the price that you want, but then if you're offering more incentives than maybe the next person, that's what's going to make your property different. So recall me saying, if you're selling your home, what features does it have and what other incentives that you may be able to offer. It may be something that you can put up front that they can see. Ask for a particular price. Say, hey, I want this price. However, I'm going to pay down your interest rate. We have a mortgage broker that we're working with that'll show you a plan that'll help get you qualified and get your home, help you get your home purchased. So keep that in mind when we're going through this. All right. So one of the bigger articles, and I'll show you guys this, and let's do this. So one of the bigger articles that's out there that I wanted to share with you guys, and you guys can see it right here on the screen. Mortgage rates jump as tariff hit the markets. Biggest spike in nearly a year. Average rate on benchmark 30-year fixed mortgage climbed climbed to 6.83%. So if you guys recall, I was telling you that, hey, we're starting to see a slight decrease in the interest rates. And we were. The interest rates, they were slightly coming down. Week after week, they were slightly coming down. You know, little nibbles, but it was slightly coming down. But it was trending downwards. And that's something that we were seeing. But with the recent tariffs and what's going on, mortgage rates spiked. We saw a spike in the mortgage rates. And this is from, like, say, your Freddie Mac. As President Donald Trump's tariffs lead to instability in the bond market, when you have that, people start reacting. Freddie Mac's latest primary mortgage market survey that was released on Thursday showed that the average rate on the benchmark 30-year fixed mortgage increased to 6.83% from the last week's reading of 6.62%. So you see that increase there. The average rate on a 30-year loan was 7.1 a year ago. So it's lower than what it was a year ago, but now we're starting to see those fluctuations where it's slightly changing. So keep that in mind. The 30-year fixed mortgage rate ticked up, but remains below 7%. Which is good. Threshold for the 13th consecutive week. So it's been below 7% for approximately 13 weeks. So as we're moving forward, guys, with this market, there's going to be a good amount of uncertainty. Leverage what's going on in the internet and be sure to educate yourself. This information that's being put out there, be sure to educate yourself. Now, like I said, if you're in a position where you need to sell your home, then you're just moving forward. But just be aware of what to expect. Homes aren't selling as fast as they were, so you may need to start the process much sooner. We are what they call we're in the selling season. So us being into selling season, you're identifying that we have more homes going onto the market, and that's already been proven and shown. So that means inventory is increasing at this time of year. Typically, buyers are becoming a bit more interested as well. Home showings, I don't want to say it just yet. We'll see what happens next month. But home showings ideally should be increasing. So if you do have a home that's on the market, you're going to start seeing increases. I'm starting to see increases in listings that I have. You're starting to see people pick up more properties. They're starting to get off the fence, start looking, just because at the end of the day, let's go ahead and start looking. Let's see what's going on out there. Let's go ahead and get ready. Stay ready so you don't have to get ready, guys. So keep that in mind as we're moving forward with the market. There's a lot of uncertainty, but if you're in a position where you have to make a decision, educate yourself. Work with someone that's going to help get your questions answered. If you are investing, be sure that you understand your exit strategies, what you're looking to do. Got people that are actually flipping homes. You're probably going to be holding on to it a little bit longer than what you traditionally and ideally may plan. It may be, look at your exit strategy, see if you need to actually sell it, see if it's something that you can actually hold on to. So that means that you're getting that cash flow coming in, you're getting people to passive income versus trying to get the quicker funds for right now. Ride the wave for the next few years. It may be a property that you need to hold on to for a few years. So make sure that you're doing your numbers that include the taxes, maintenance, repairs. Make sure you're putting that all in there. so that you can make an educated decision when you're moving forward. But guys, I appreciate you tuning in. This is another magnificent episode. Definitely appreciate it. Another magnificent episode of State of the Real Estate Market with yours truly, myself, Chris Brown. So appreciate you guys. Appreciate you sending your questions. The questions help motivate me and making sure I'm doing the necessary research to bring to you guys on a regular basis so that you have this information. This is something that, if a conversation comes up about real estate, and you're like, hey, I listened to Chris the other day and Chris was talking about this, let me get some more insight on it. Or if I'm trying to make a decision, let me see what professional out there or individuals out there that can help me make that decision, help provide me with the value that I need. So, with that being said, guys, have a blessed day. Take care of yourselves. Appreciate you and appreciate you more. But on to the next, we will have our next episode. Next episode will be in May. So that is May 16th. It's Friday the 16th, guys. This year is flying by. So May 16th, I'll see you at the next State of the Real Estate episode. Make sure that you guys, if you haven't already, be sure to subscribe onto the YouTube. With the YouTube, you guys will get a lot more updates in between many conversations that I'm having moving forward. But with that all being said, I appreciate you guys. Take care. Have a good day.